Welcome to the deep dive. Today, we're really getting into Gujarat Gas Ltd.
That's right.
Specifically, we're looking at their unaudited financials for Q1 of fiscal year 2026. That quarter ended June 30th, 2025.
And these numbers just came out, right? From their
Yeah.
board meeting.
Exactly. The board met on August 5th, 2025, started around 3 p.m., wrapped up by 4:40 p.m. They reviewed and approved these results then.
Got it.
Okay, let's unpack this. Our mission here really is to pull out the most important bits from these reports, these announcements. We want to help you quickly get the key takeaways without, getting bogged down.
Absolutely. And it's not just about the numbers themselves, is it? It's about what they actually signal for the company, and maybe even for the wider energy sector here.
Yeah.
We want you to feel informed, get those aha moments without feeling like you're drowning in data.
Couldn't agree more. It's about making sense of it all. So with that, let's jump into the headline financials because it's a bit of a mixed picture.
Okay. Where do you want to start? Quarter on quarter.
Yeah, let's do that first. Comparing Q1 FY26 to the one just before it, Q4 FY25, there's definitely some positive movement there. EBITDA, for instance.
Right. The earnings before interest, taxes, depreciation, and amortization. Basically, core profit.
Exactly. That increased by 11%. It hit 579 crore rupees, up from 524 crore.
That's a decent jump.
It is. And profit after tax, the PAT, that also went up by 14%, actually. So 327 crore compared to 287 crore.
Okay. Good momentum.
And crucially, their CNG volume also saw a nice little bump. It reached 3.33 MMSCMD, that's million standard cubic meters per day.
Up from 3.22 in Q4.
Yep. So sequentially, things look pretty positive.
Right.
But, like always, there's another side to it. If we look year on year, so Q1 FY26 compared to Q1 back in FY25, things get a bit more complex.
Okay. How so?
Well, for starters, revenue from operations was actually down. It came in at 4,065 crore rupees for this quarter, compared to 4,615 crore in the same quarter last year.
Okay. So a dip in the top line year on year.
Right. But then look at profitability. EBITDA was 579 crore this quarter, which is actually slightly up from 574 crore in Q1 last year.
Oh, interesting. So revenue down, but core profit slightly up.
Exactly. And profit after tax, that was 327 crore, which is a tiny bit down from 330 crore last year. So you see, it's nuanced.
Okay. What's fascinating here is exactly that mix. You got strong quarter-on-quarter growth suggesting, good recent performance and maybe cost management. But that year-on-year revenue dip alongside fairly stable profits, well, it really underlines why you need both perspectives.
Yeah.
The sequential growth shows maybe some recent operational wins or market improvements.
Right.
While the OY numbers might reflect, longer-term price pressures or maybe some base effects from last year, it paints a fuller picture.
That makes sense.
And it's probably worth mentioning these are unaudited results prepared following Indian accounting standards and ASE. But they did have a limited review by the statutory auditors.
And the auditors gave them a clean bill of health.
Yep, an unmodified report. So no major red flags found in the review process.
Okay, good to know. That adds some confidence. So moving beyond the financials, let's talk operations, because that's where some really compelling stuff seems to be happening.
Yeah, definitely.
Here's where it gets really interesting, particularly that CNG segment you mentioned earlier.
Absolutely. Achieving their highest ever CNG volume. That's significant.
That 3.33 millimeris CND figure, yeah.
And it's not just a record. It's also a 12% increase compared to the same quarter last year. Year-on-year growth of 12% in CNG is pretty strong.
Wow. 12% YoY. And they've got the network to support that, right?
Oh, definitely. They're operating 830 CNG stations now.
Yeah.
That's a substantial infrastructure base to build on.
And it sounds like they're not just relying on existing stations, they're actively expanding. What's this FDODO model?
Ah, yes. The FDODO franchise-owned dealer-operated model. They're pushing this quite aggressively.
How does that work, essentially?
Well, it allows them to partner with dealers who own and operate the stations under the Gujarat Gas brand. It's a way to expand faster, potentially with less direct capital outlay from Gujarat Gas itself.
Smart. Leverage local partner.
Exactly. And they've already signed, 69 of these FDODO agreements? So that's gaining traction.
Okay. And it's not just vehicles. They're adding homes, too.
That's right. Over 35,000 new domestic customers were added just in Q1.
35,000 in one quarter.
Yep. Bringing their total household count to over 2.3 million, now 23.02 lakh households.
Okay.
If we connect this to the bigger picture, You can really see how these operational numbers, especially in CNG and domestic PNG, are driving things.
Right. Let's look at the total volume breakdown for the quarter.
Okay, so industrial sales were the largest chunk at 4.71 CMD. Then you have CNG at that record 3.33.
Uh-huh.
PNG for domestic use was 0.69 CMD, and PNG for commercial use was 0.14 CMD.
Adding all that up.
Comes to a total sales volume of 8.88 CMD for the quarter.
And that strong CNG growth, plus consistently adding thousands of homes, that really builds resilience, doesn't it? Especially if, say, industrial demand fluctuates.
Precisely. It provides a solid base and shows they can find growth even in, well, a challenging overall market.
So, operationally strong. What about strategically? Are they signaling any bigger shifts in direction?
Well, they've been quite explicit about wanting to provide complete energy solutions. They're aiming to be a total energy solution provider.
Moving beyond just distributing natural gas.
Seems like it. That's the stated goal for communities, businesses, industries, a broader energy play.
And are they actually doing anything concrete towards that?
Yes. One specific thing approved in that August 5th board meeting was a plan to start sourcing and selling propanol LPG to industrial customers.
Ah, okay. So adding another fuel to their portfolio for industrial clients.
Exactly. They frame it as part of their customer-centric approach, giving industrial users more options under the Gujarat Gas umbrella.
Interesting diversification. But beyond adding new products, were there any bigger, maybe structural changes discussed? Anything fundamental?
Oh, absolutely. This raises an important question about the very structure of the company group. The board actually approved something called a Composite Scheme of Amalgamation and Arrangement back on August 30th, 2024.
Okay, that sounds complex.
It is. It's a major restructuring plan. Basically, step one involves merging several related state entities, GSPC, GSPL, and GSPC Energy Limited, into Gujarat Gas Ltd.
Merging them all into GGL.
Yes, with an effective date or appointed date of April 1st, 2024. So, retrospectively, in accounting terms.
Wow. Okay. What's step two?
Step two, after that merger, is to then demerge or spin off the gas transmission business undertaking from the newly enlarged GGL.
So separate the pipelines, essentially.
Exactly. That transmission business would be moved into a separate company called GSPL Transmission Limited, or GTL. And the appointed date for that demerger is April 1st, 2025.
So consolidate first, then separate the transmission assets. What's the thinking there, do you reckon?
Well, the likely goal is to create a more focused gas distribution company in GGL while having a dedicated entity, GTL, focused purely on the transmission infrastructure. It could potentially, unlock value, improve operational focus for both businesses.
Makes sense, but this isn't a done deal yet.
Not at all. It's a huge undertaking. It needs the green light from the Ministry of Corporate Affairs, the MCA, and various other regulatory approvals. So it's approved by the board, but still needs those external sanctions.
Right, a lot of hurdles still to clear. And did the board cover any other, maybe more routine governance stuff?
Yeah, a couple of standard but important items. They appointed new secretarial auditors in SKK Patel and Associates. That's for a 5-year term starting April 1st, 2025.
Okay.
And they also appointed cost auditors for the current fiscal year, FY 2025-26. That's as Belis Kailash Sanklecha and Associates.
Standard oversight roles, but necessary.
Absolutely. Keeps the corporate machinery running smoothly.
Okay, so as we wrap up this deep dive on Gujarat Gas's Q1, what we've really seen is quite a dynamic picture. You've got those financial strong sequential gains, but some, let's say, interesting year-on-year comparisons.
Right.
Then you have really solid operational growth, especially in CNG, breaking records there. And on top of that, these significant strategic moves diversifying into LPG propane and this major corporate restructuring plan.
It's definitely a company in motion.
No kidding. We've covered a lot of ground.
Indeed. And maybe a final thought for you, the listener, to mull over. How does all this fit together? Think about this big internal restructuring they're planning, combined with branching out into things like propane and LPG. How might that position a company like Gujarat Gas, traditionally focused on natural gas distribution, for the future? Especially in India's, rapidly changing energy landscape.
Good question.
What signals might this kind of comprehensive approach, restructuring and diversifying, send to other players in the energy sector as they figure out their own path forward? Something to think about.